Testing, testing, testing. Open live, open live. Oh, yeah. Oh, what? My mentor is also live. That's actually, I chose the worst time to actually be live. I think most probably it's just better to sit and watch. That was beautiful, actually. Um, there we go. Just see. Oh, I'm also live. Yes, we're moving. We got Spirit Love Not War in the building. We also got the mentor on, bro. I think you should watch him. Like he's, I haven't watched him in a while. I'm not gonna lie to you. I haven't had the time. I would love to sit with him and just chop over price, but like the world's got the best of me, man. The world's really got the best of me. But yeah, thank you so much. Thank you so much. Just me and you, my good sir. Literally, just me and you. So we're gonna start simple first because I don't really want to do too much. Like the move already happened in terms of the market maker model where we have a swing low right here all the way to the high. And I love people are studying the top 21 minutes after every top of the hour. That's beautiful. And if you notice, like if you always study the function it serves, like to last yesterday, if not Monday, it served the function of the first bullish inefficiency post the first 21 minutes. Today serves as the last bearish inefficiency post the first 21 minutes post 8 o'clock. So it's kind of interesting to always study those. We do have this one also, but relative to that swing high, not really a model worth engaging in this time. 33, 36 did offer swing highs, which is beautiful for shorts, but that's a different conceptual model in and of itself. So we're going to try and really hone our focus in on the current price action we're dealing with and how to interpret, how to read it, how to navigate through it, and most importantly, how to get the buyers. One of my students asked me a very important question. He's like, how do I identify relative to the first inefficiency whether that first inefficiency is going to play, let's say if it's bullish, is it going to offer support for continuation of higher prices, or is it going to play inversion and act as shorts? So I want to try and kind of give you that using the first inefficiency post 2 o'clock, and just to give you a sense of why I would expect it to do something relative to when I'm studying it. So let's say I come into the financial market, it's 2 o'clock, 11 minutes past 2, we're late, we're 11 minutes late, sorry, forgive me. But when I just look at current price action on this scale, and I look at the previous hour, and the hour before that, and the hour before that, and maybe the last hour if I'm feeling facetious. So between this, I want to predetermine the current range we're in. What's the lowest low within this current price range? Preferably, I always prefer the previous 3 hours, 1, 2, 3. So I'll mark the lowest low, which will be these, baby, and the highest high, which will be that, baby. So when I look at it, which one looks smooth and which one looks like it's literally this is what we're going to tag? Based on experience, you already know, you can feel it. It's going to look for sell side. And now the question is, how is it going to do that relative to the proximity of all this engineered liquidity? And if it's going to go higher and take out buy side, what inefficiency or fair value can it post to on the far left that you can go short or long in? Personally, it's this one here, which is awfully far at 9:30. Isn't it funny? First inefficient, or the one that pops out the most. This one as well, but this one has already been traded into if you look at it from the perspective of an inefficiency that has been traded into. Like here, for example, you can just small gap left here, but the one that's obvious in terms of no buy side, it's the one at 9:30. So if we're gonna perform any higher prices in terms of retracement and break past this high, your first order of focus is here. It's gonna most probably gravitate to here. Do we have any swing lows or swing highs? We do have swing lows here. We do have that one. So you kind of watch that. If we're gonna break this range high and target any form of buy side, it's going to be here. If we're going to go for any form of sell side, it's obviously these babies. But now, which one are you leaning more into? Which one are you going to put your money behind? Personally, I put my money behind shorts. The market has been, we just made all-time freaking highs, bro. So we're going to, it's going to be bloodbath on Wall Street. So what have we done? We've taken our buy side here. Right there. We've taken our buy side. Like, don't worry, I'll look at the charts now, bro. I'm still cooking. I'm in the kitchen. I can't cook and You guys asking me about the ingredients and all that, bro. I can't, like, just watch the shift instead of joking. I'm just being facetious. I'm having the time of my life. I missed you guys so much. I've had a really, really stressful May. On Jesus Christ, I really thought I was going to do this every day, but it's actually harder than I thought. My investors are currently in a pickle. We made an investment deal together, and yes, 2 days ago, he had to cough up 50% of the capital per usual, to pay off our other investors. Actually, it's basically our service providers, you know. And he's like, it's bad, I must give him a day or two, at least till Friday. And that's 5 days, and in investment, if you're not on time, something's wrong. And now I want to go look into his financials, he doesn't want, I'm like, what do you mean you don't want me to audit your financials? So you can hear in my breath, I'm really stressed out. And, I don't want to dig into my savings in any shape or form, because then that will kind of change my lifestyle. And it's not about the lifestyle as well, it's just about the stress levels. I didn't work this hard to stress this much. So, anyways, so what are we looking at? I'll delete all these from our charts and just have swing highs and swing lows, because this is too much. We have this, we remove, and then we'll remove this hour as well. I don't need it. Then we'll focus on 1, 2, 3. That's all. Everything else is not noise, but we just don't need it for now, because we're studying dealing ranges. So every time you come into the chart, you're studying a 3-hour dealing range. And how are we going to act inside that 3-hour dealing range? And whether we're going to take out sell side or buy side liquidity using the first presented inefficiency. And this is literally what I'm showing. And also, if you want to know more about time, relax. That thing, I'm going to ease into it over the years. I can't really do it in one lesson, because you can't trust time the way I do. You haven't seen it as much as me. You've polluted yourself with so many other conceptual ideas in which they focus on nothing but the clock just down here on the bottom left-hand side. But anyways, so first things first order of business, first inefficiency post, 2 a.m. Easy setup, easy long. From this point of fair value to what point of fair value? See this baby here? So that's kind of all you look at if you're looking for longs, and if you're expecting this buy side not to be tagged. So you check the current range from where we are now, here to there. How many handles? 10, 15. Let's get half of it. It's 21 handles. So you mark that. Go long. With the expectation of potentially continuation, just to that fair value. No need for to be anything but that. You just get in sync with the financial market. If you're wrong, you're wrong. But you're just trying to get a feel of it. Get in the gist of things. Yeah, there we go. So we're studying that with maybe potential stop loss just below the swing low, with your target being within that fair value. So liquidity. So notice how when you're trying to get in sync with the financial market, you're trying to see its willingness to either stay within the range, work within inefficiencies, and within those inefficiencies, are we going to see lower or higher prices relative to them? And the more you continue to study that, the easier it gets. It's not about how much money you can make, how much money you can lose. It's all about getting in sync, not being afraid of being wrong, not being afraid of being right, just observing every single day, every single week, and you don't stop. First. So you can watch any inefficiency you want. I'm just showing you the ones I like. But it's all about your ability to study, your ability to trust the model you're studying, and let it work for you over time. There's no need for it to work today. There's no need for you to crack it. There's nothing to crack. It's all about being able to get in sync with it at any given moment in time, literally. Let me just see this. So if you also look for a continuation, you want to see it take buy side, and then if it takes buy side, that's your baby there. We'll see if it will give us that. There's nothing much for us to work with. And you just let it continue to climb. You're not gonna go short, you're not looking for inversions, you don't care what happened at 6 million 30. You don't care. All you do is you come here on time, you watch the first inefficiency. And not everything will be obvious at that moment, because if it's not, that means you're in the wrong market condition, or you're in very manipulated market conditions. And in my personal opinion, you see an o'clock an hour opens and trades higher. What's that? It's a classic power of three, where the majority of sell side, I'll take partials here, most probably all my profits, and see if it's going to engineer swing low, but we'll see. I'll remove this just to show you kind of what I'm looking at. So this is engineered liquidity in my opinion. So you're going to watch that. Personally, I would take all my partials here. You want to see if it's going to make an attempt for 50%. If not, just mark whatever swing high forms and watch the first inefficiency. Don't be afraid. It's not about getting in here and taking it out at the buy side liquidity. It's about taking a 20 handle scalp, 10 handle, 15 handle, just based off the first inefficiency. Johnny, yes, let's go. Equilibrium, nice to see you. Good to see you live. Thank you, Machiavelli. Oh, this is Machiavelli. No, I'm tripping. Obvious, my student. Shout out, man. I knew you'd be here. Shout out from Italy. Did I hear my name? Of course, partial. Like, geez, like we're outside, fam. Like we're not, we're not playing here. But anyways, the goal first is to understand the current liquidity you're dealing with, the first inefficiency post any hour, and what's it going to do. So you notice this is beautiful. You're seeing a potential extension. So from there to here, with your stop here, that's beautiful 20 handle, 10 handle, 15 handle execution. And personally, I'm not a fan of that because we're looking for the whole shorts. We're looking for the whole juice. So we're looking for like freaking 121 if we can milk it. That's if it gives us, but we need to set up to form. So now here comes the 221, 21 minutes after and top of the hour. What has happened within the first 21 minutes? Price has engineered first presented inefficiency within that given time frame, and within this, we're at fair value. That's it. At a certain time, we're at fair value relative to the time frame you're watching. So I'm on a 1 minute chart, and we're looking at fair value. This is how you can also time when your TP is going to hit. It's a bit more difficult to teach. I genuinely don't know. It's very hard. But anyway, so here that would have been where I've taken all my partials. Maybe I've taken profits because I don't think we're going to tag that high. This is thoughts coming in real life. But you measure from current, where you've entered long, potentially to where we are now. Does it offer you 20 handles? You know me, as you mentor, don't take 20 handles and I dip. And that's kind of all you look at. You don't really do much in terms of, you're not looking to do this every second, minute, every hour. You just take your bread, take your piece of the pie and leave. And you just watch and wait for yourself to get in sync. Because what you don't notice is the market can always set itself up for the next session. It uses the PM session to set itself up for the New York session or for the last hour of trading. And for you to force your will or impose it relative to your expectation of what it should and shouldn't do, I would have taken partials here, then moved my stop just to break even. And I would expect it to take out that high now, If it don't, then it's cool. But what you're always doing is you're putting yourself in a position. And let me just screenshot this for documentation purposes only. And notice you're not in an execution. You're not making or losing money. There's no fear, there's no greed, there's nothing. It's just pure price action. You're pouring your thoughts into the financial market. You're pouring the way you think, the way you conceptually view things, and you're just reading it without nothing. And you see the small inefficiencies. I don't like that. Even this market is sneaky. Just watch here. I'm watching that there. This inefficiency around there. So we've traded into it. And anyways, so from here to there, that's a beautiful 20 handle, 30 handle scalp. Doesn't really matter what you're looking for. But what you're doing is you're always gauging it relative to inefficiencies. And once you've passed this inefficiency, you do expect to see higher prices. But we do have this small one here where we could use that as a potential swing high for potential lower prices. But as long as that's not invalid. You still continue to look for higher prices. And your goal is to anticipate when the smart money reversal will come. So let me give you, this is what you're looking for. This kind of answers your question. How do you know this is going to play inversion? I want you to look at this from this perspective, from only fair values. And I want to zoom in closer just so that you see every single fair value I'm going to just mark in green. If I miss anyone, it's okay. It doesn't really matter. I'm just showing you a conceptual idea. We have this inefficiency there, right? We have this one here, which is the first one. We have a small one here. There's no need to watch that. This is where we went long. And this right there, it's a small inefficiency. If you study that, right there, small inefficiency. Then you continue to mark to your left, inefficiency. And I'll tell you why I'm doing this. And then you continue to watch to the far left. There's no inefficiency. There is no inefficiency. And there's only a swing low. So this inefficiency gets traded into engineers' sell side liquidity. Right there. This trades into fair value, engineers' liquidity right there. This trades into fair value, engineers' sell side liquidity right there. And I want to delete all these and just leave the liquidities that were engineered when these swing lows and swing highs were made. We do have a swing low there as well. And we do have this swing low there. So now when you're looking at it from this perspective, I want you to watch. Just from this price action, do you see any form of fair value here? That price can, once it takes out that liquidity, it can form like a support, like if it breaks this, then it supports here and then runs higher. There's no. It's only sell side liquidity. So when you continue to see these price actions, just study all the fair values that form. Just watch it, creep it like a fucking, like you're a hunter, because we're hunting here, you know. And you're looking for, you're waiting because it's going to come, where it wipes this clean, where when it trades into liquidity, it looks for fair value. Trades into liquidity, it looks for fair value, but can't find it, and all that it finds is liquidity. And that's where you get all those low resistance liquidity run. But when you check just on the far left of this fair value, or this liquidity, that liquidity, you're going to find a small fair value. I'll show you which one, if it shows even. Let me mark these just so that we can track it. No, don't work with me, NQ. Right there. If you go to the far left, there we go. We have sell side there, beautiful, free money. What do we have? We have fair value. You see that? Unlike those previous ones, we're below liquidity, which is this sell side right there. We don't have fair value. So this becomes a very important inefficiency. So if I'm to expect a bounce or any form of retracement, the first one will form here. Everything else should be, will be, and can be low resistance liquidity run. So that's basically the gist of what's happening here. We have engineered liquidity just above fair value. What have we done? We've gone long, targeting buy side, which is external. Post buy side liquidity, we have buy side, and we have post the first inefficiency, post 930. You know, and this is actually the first inefficiency post 930. Technically the best one relative to the way the mentor teaches. But literally, that's it. And you're waiting for, because it's gonna come. I swear to God, like I can bet my house on it. But because I'm gonna I lean more into shorts, but the longs are just to show you that we can read this like a book. That's the goal. The goal is to read this like a book, and you choose the execution you want. If you want shorts, you wait for them, because you know they're coming. Anyways, just a screenshot for documentation purposes. But that's kind of the gist of it, you know, the goal. And then now once we've booked the high, you kind of wait. You want to see speed and distance because there's no fair value here. The only form of fair value is this baby, which has already been kind of traded into at exactly what time? At exactly 10:18, 10:17. I wish it was 10:18, but anyways. So that's kind of all you have to work with. And what I do is I'll mark this as a predicted high, meaning I'll expect this to be the high of our. If it does, if not, then that's our next target there. And I'm in long. My stop loss already break even. I don't really care what the hell happens. There's nothing for me to work with. The only thing that I can see as a form of support is this inefficiency right there, which could play inversion, which you'd like to watch, but we're looking for shorts. So now this is where you track the execution, where you're gonna enter. That's where you're gonna engage. Where did I engage? The first inefficiency, right there. That's the perfect engagement, long within order block, whatever you want to call it, don't matter. Trade first into halfway of this inefficiency, blast through it, all the way to buy side liquidity. Now we have what? This inefficiency, which is bearish. We just blasted through it, engineered fair value within it. So now if you're looking for shorts in the near future, you're not gonna force yourself to go short and time the high. Just wait for this inefficiency for it to go lower, treat it as support, or if it doesn't, it's okay. Just watch it, and most probably it will offer you a beautiful shorting opportunity targeting your external range liquidity. But the problem is you're not patient enough to do that. You're always waiting, not waiting. You're always almost, nah, work with me and here. Okay, let me just do this thing. Okay, delete that, bro. It's always like you're waiting for, you kind of forcing yourself to be a tick to the high trader. Like, can I grab the tick high? Can I grab the tick low? That's not how it works here, bro. The goal here is to make freaking money. You're literally here to make money. Everything else is just rubber meets the road. Like, everything else is just a bonus. You're flexing your skills on Twitter. Don't think we're here on Twitter to like, I don't know. People think people on Twitter are here to help you. Like, how do you help me by sending me freaking screenshots? How's that supposed to help? You know, show up live and really show me how you would read it, how you would conceptualize it, why you expect to be wrong, expect to be right, just relative to how the marketplace is printing. And you document from current entry, if you held till the external range liquidity, that's 50 handles on one contract. How much is 50 handles? And tell me if they pay you that in your job within freaking how many minutes? Within 20 minutes, or for every 21 minutes you work. Actually, you're actually here for 15 minutes, but for every 15 minutes you work, it's impossible. But then now you gotta put yourself in that mindset where, and also what I did say, when you focusing on reading prices, because now I'm in front of people, so I watch everything. I'm a bit cautious on watching this, that. But if I was alone, honestly, I would extend it from this fair value. I'll leave it all the way to that buy side, ultimately the first, and then look for a rollover heading into Asia, targeting these lows. But I really, there's a lot going on in my head right now, but that's a beautiful opportunity just in and out of itself for longs, and nothing more, nothing less. I wouldn't do too much, because I do understand the emotional state I'm in. I'm a bit frustrated. I might be overzealous because I want too much, you know, because I need to make it now. I don't need to make it tomorrow, next week. No one's going to help me. No one on Twitter is going to send me $1 million and say, hey, Alfred, like, deal with all your problems, you pay me later. That's not how it works. We got to grind our way into it. We got to work on math. You know, when you have employees at stake, where if you don't cough up your 50%, you know, people are not getting paid. They're getting paid half their salaries. It's hard, you know. It's mentally exhausting, and you don't really want to find yourself in that situation. But here I am, you know, here I am, and it's very difficult for not want to muscle up the courage, but I'm carrying a lot in terms of per execution, so I'm very picky. I don't care about the ones that don't matter where we're in consolidations. I don't mind taking a day off just to be, so if let's say if this is the high of hour, which comes in at exactly 2:30, what do we do? Don't go long or short yet. What's the first thing you do? First thing you do, watch this inefficiency, baby. This one, the bearish one. That's the first one you watch. That's your telltale sign of what's going to happen next. Everything else, don't be a Alfred 2.0 trying to catch smart money reversal, because that's light work. We do that in our sleep. But you need to find a way to get to a point where you do it for yourself. And anyways, also setup is null and void. Let me just screenshot and call it a day. Not call it a day, but like for documentation purposes only. And thank you guys so much for joining. Like, imagine you just come in and you make 50 handles, and then you just chill. You talk about random stuff every day, and do the math. I really like what I did to really soothe my soul as a trader. Like, when I sat for these 15 minutes and I made 51 handles, I'll literally type it on a calculator. How much is that on 1 mini? And if that money was to hit my account as we speak, what would I do? Maybe I'll take myself out for lunch right now. Actually, I would love a massage. So I'll most probably pay for a Thai massage. And I'll literally go Google Thai massages. And I'll go to the end where it's kind of it's petty actually. Now that I look at it, what the fuck? I'm just like, this broke man tendencies. But I'll literally go and Google places where you could go for a Thai massage, whatever. And I'll go to the last, like literally, you do the whole process until it gets to the payment part, and I'm like, fuck, yeah, literally, But that's why you do it. It's gonna get to a point where you do have the money to press that pay, and you do go to that spa, and you do relieve yourself of all the pressures you have currently, and it's all about patience. You will get there eventually, whether the world likes it or not, because who else is it gonna happen for? Like it's meant for you. Like everything that's here, it's meant for you. And also, I want you to notice something when. Okay, let me just remove this. Anyways, so you can still hold it, move your stop to break it. I don't care, doesn't matter. But you already took your piece of the pie, and this is the hard part, knowing that you're going to spend the rest of your life coming here into the financial market, whether you're in the gym, whether you're at home, whether you're in the office, to get in sync with how the first hour prints. Swing low, spools to an external range liquidity. That's all I teach. But I've been more vocal with it now. And even if you watch, let's say the first bearish inefficiency post 1 o'clock, what does it do? Plays inversion. You get, so they're very sensitive. Don't never discard them. Personally, I believe these are the real support and resistance levels in terms of which you can study, and also the last swing high. There's a lot. There's so many. If you just study the first one, it reveals a lot, because what you're always doing is you're tracking it, and you're not getting lost within the small swing highs and swing lows. I think that's where experience comes in. This is where I come in, where I'm guiding you and I'm showing. And I wish someone did this for me, because what the hell, we're going to print money like cupcakes, bro. We're going to print money like cupcakes. But man, I won't lie to you, man. I would love this to be a swing high, but we'll see. We'll see. I'm just watching it. It's in the radar. It's like it's shady. I want to see a huge displacement lower if we're going to. I also want to watch how the first inefficiency post 3 a.m. So now this is where things get interesting. If you're looking for shorts, and you come into the financial market and this is what you're seeing, what are you going to suspect from the first inefficiency post 3 a.m. or 3 p.m.? You're going to want it to offer sell side shorts. So you already know what time and what you're gonna do before. We're fucking 36, we fucking 24 minutes before time. We already know what we're gonna do, why we're gonna do it, and when. Isn't that what you want? That's what literally what we do trading for. So that we know what time we're gonna enter our execution. But that's hard. But visually, I think the mentor, that's how he shows you how to track them, like to watch them in real time. But conceptually, that's how I look at it, Like I already know I'm going to go look for shorts between the last hour of trading just based on this current price action. Because we're entering deep into discount, or is it discount? Yes. Yeah, whatever you want to call it, man. I don't want to go deep it too much and say discount and premium. I'm not about that life. But that's literally it. Then you do this without money. Literally. You do that. So when you mark, like for example, I would love to go short here and you're too scared, wait for the first bearish inefficiency post 2. Come on. Work with me here, bro. Work with me. You guys are slow, man. Come on. I don't know if it's right, but I've seen pattern. I don't want to hear that. Okay, anyways. Greeting. Did I hear my name? Of course, Partials. Love you. Finally catch you live. The real job calls. We'll call later. Come on, Partial. You just came and went, my bro. We're about to make money here. Anyways, jokes. I don't know if I'm right, but I've seen pattern. The price goes from buy to sell. Liquidity 9 p.m. Fair. I don't understand. My good sir, we making money here. This is so fire, of course, equilibrium. Like I'm the best thing since sliced fucking bread. Thanks, bro. This is gold levels. Like, come on, light work. Thanks for the time, knowledge. Turn the notifications on. Have a great rest of your day. Love you so much. So, anyways, so now that's done and dusted. We have our first bearish inefficiency right there. If it forms, this is where we're gonna go short. So you wait for this like 30 seconds before it prints. But then the likelihood of that working out, not pretty low, personally it's pretty low, but the reason for that is because of this inefficiency. So what you want to see is you want to see trade into that first bearish inefficiency and then continue to roll lower. If not, then this would just be the first swing low. And that's okay. And then you're going to see it gravitate to that swing high, and that's cool. Don't want to always catch the low, because you might not. But also, I told you I'm being very cautious today. So I do think I'm going to get it wrong one of these times. But I also think it's good for me to get it wrong because then you see I'm human. And you don't really hold yourself to any degree of unrealistic expectation. So I would even go short now, in my opinion, but watch it trade into the first bearish inefficiency. And if it doesn't and just rolls higher and that's okay. Then you're just gonna watch it chase that buy side. And you're not in an execution, you're not in a trade. So don't act like it only gets scary when you're in trades, when you're risking real capital when you're not supposed to, when you don't trust it. So you watch that, but it's pretty shady. It would have been preferred if we did have a full body close just below 50% of that, and that will indicate that we are going to see lower prices. But the fact that it didn't, it's okay. And we just continue to track it just like that, day in and day out. Personally, our market, because then what you're going to do with market time, isn't that beautiful? Personally, I don't think it's going to book the high. It's cool. Might use this as support to tag that and then go into 930 highs. And I don't think we're going to go that high, but geez, man, anything can happen on InQ. And also, now that we've formed the first bearish inefficiency, this becomes a very important inefficiency for me. Very important. So I'm going to watch how price, either if it treats it as support because I got efficiently removed, then I'll watch it. But I won't study anything other than that. Anything else is just basically me making noise. I know this is cool though. I know I can do it at shorts, but it's pretty difficult to emotionally be involved. That's the hard part. That's really the hard part. The getting in sync with your emotions and really being humble enough and also just to be funny and witty. Because I'm not here to flex in reality. Like I'm just here to show you that it's how you read it, man. It's not really that scary. It is if you're always risking a million handles and you're not patient and you don't know. You see that? I don't like seeing that. So we'll see if 242, if that doesn't displace lower 42, 45, then this is going to be supporting. Then we're going to blast that high in that one. But it's okay. I don't mind that happening. I really don't. I just, I don't mind it. But this is just the first bearish inefficiency, so I'm studying. I'm not engaged, I'm not in a trade because I don't trust it with conviction. But now imagine if this forms where it's a huge displacement. You can't miss it. It's maybe at a time in which things are going to happen and you've been watching all the inefficiencies and you've been tracking it to the T and that's what forms. It's free money. But for now, it's because there's so many factors that, first of all, the first factor is this one. You wanted to see it really melt lower and then continue, but the fact that it didn't, it just shows it's not time yet. It's not that you can't read the price action. It's not that you're not good enough. It's not that you're not the best thing since last period, because you are, Alfred. Like you literally are. The only problem is you want to be that every single day, every week. And there are times in which you're reading it so correctly that you want to force yourself to get it right in like to and through. But in reality, exactly, you see that? The fact that it leaves, then you watch from that fair value to that fair value. That's what my brain only sees in that liquidity, but we'll see if it continues. But then that trade setup will be null and void officially. But we're still going to stay in the execution until we get efficiently removed. Then we're also going to screenshot that. Also screenshot how you feel. When did you spot it in terms of could you reverse in time? Like all those small quirky details, they play a lot. But if you always have money involved, then you're never going to get it right. You're never going to get it right. Literally, it's impossible for you to get it right. And shout out to the 8 people watching, man. Really appreciate you guys. I would have kept. And also, let's say if you are potentially looking for higher prices at any form of liquidity, when you see it break past liquidity and you get deep retracements, and you look to the far left, it's within fair value or not, and there's no inefficiency basically on the far left. Those are very low probability longs, meaning the market is priming itself for shorts, and everything going up is just pacing. So it's like just blinding people basically. That's kind of how I see it, closing the veil. And it becomes very difficult for people to get in sync with it, almost impossible. It's almost impossible. Yeah, fair enough. Don't trust YouTube, bro. YouTube, you can't trust it, fam. But shout out to everyone watching, man. Really appreciate you guys. It's not about making or losing money. It's not about being right or being wrong. It's about being present, showing up right on time, baby, and being able to track it without getting lost. And don't forget that the market, it can color outside the lines a lot, especially when we're adult. Man, I was reminiscing, bro. Like, I remember on Jesus fucking Christ when I was trading NQ at 14K, at 15K, 16K, 17. We had 30K. Like that sank in like a ton of bricks, bro. Holy wow. Like we're 30 grand. Like I would have never seen it. Like I would have I wouldn't have I don't even know what the hell, what are we doing at 30 G's? So I was reminiscing on how much time has really passed. You see this when you see like that form of potential swing low, watch for blast above buy side, honestly. And it's okay, just continue to watch it and I'll wait for the next setup. I won't indulge to quickly go in again. And that's okay because we catching the 200 handle shorts. That's what's happening. You get what I'm saying? But allowing yourself to be patient, doing it once, priming yourself, getting in sync with it as it goes higher, as it lives and breathes. You know where it's going. You're not guessing. You know. If it doesn't go here, to go there. If it goes there, it won't go here. If it goes here, then this is what you should do. What are we waiting for? The macro. And literally that's it. So you're at the prime spot as an executor for you to just literally do what you have to do. There's no need for you to do too much where you're forcing yourself to toggle to notice how I never went to no higher time frame. You haven't seen me on a 15-minute or a 6-minute chart on a 6 million hour chart or 4 hour. We're just on one price action and we're reading it from liquidity to fair value, from fair value to liquidity. That's it. Everything else is noise. That's another bullish price action. You should expect 1050 to cross. No, fair. Nah, macros are cheap, bro. Depends. Joking. I prefer minis though. I'm a minis boy. Call me mini. Call me mini rapid repricing, bro. Mini RR. But yeah, that's the baby I'm man. I prefer that over anything else. I swear to God, I prefer that over anything else. I feel so peaceful today. Just doing this live stream, I feel like I'm getting a lot off my chest. It's ridiculous. But price action is really humbling. Knowing that the only person I can depend on is me. Like, no one is going to come help me and tell me, hey, Alfred, this is how you do it. Like, no one's going to come help pay my rent. No one's going to help buy my food. Like, no one. It's only me. come here with, and then these people want me to do courses and then what mentorships or some shit like that, bro. Do you know how much time it takes to manage people? I can't do that. I swear to God, I can't. I tried, but and then you gotta manage it. Maybe if you create like AI bots, but then you have to learn how to do all that, and I ain't got time for that. I don't have. So this is the best I can do. Just do it live. And maybe I also will drop a six lecture, like almost said a six. Yes, it is a six lecture, like model lecture number 6. I'm still priming. Come on, we have the whole year. So chill with me. It's going to be a 10-part lecture most probably, but I'm going to try and drop as many videos as I can. Mostly focus on lives though. But that's basically the gist of it, man. No one's coming to save us. No one is going to help us. No one's going to feed our kids. See right there. Now you want to see spooling. We've entered the macro. You should see it run in one direction. Really, you should see it run in one direction. Whether you heading into the first hour, heading into 3 to 4 o'clock hour. So now 3 to 4 o'clock hour, you're going to watch the first inefficiency post. 3. It's going to be amazing. So if you're too scared to enter or go, it doesn't matter. If you're just too scared to do anything, then you can just wait. Just patience, time. Just wait for it. It's going to show up. The thing is, when it doesn't show up the way you want it to, that's kind of where, I would like to say rubber meets the road. Because you want it to be a specific way. You're not willing to accept how it shows up. And if you never accept how it shows up, you're going to be stuck in the same road. You're never going to be flexible, because the goal of trading is to be adaptable. And if you're not adaptable, if you can't adapt to change, if you can't adapt to new information, then you're dead. You're dead. Because the marketplace could consume you alive. You're not willing to change. You're rigid, you're stiff. You think your way is the highway. I literally learned, I can not learn about trading in the charts, but I can just learn about life and psychology and how people manage risk just by listening to them on their podcast or whatever. And I just get a sense of who they are, the type of traders they are, the things they have to overcome. And I think one of the major things is just trust yourself. Because whether you like it or not, no one is going to come pay your bills. No one is going to pay your debt. No one, except you. And funny thing, I have no debts, man. I'm 26. Shout out to me. I've never had a debt a day in my life. Gangster. Like, what the hell? I'm gangster, fam. I'm outside. Jokes. So also, like, going long is like the most ideal place too, if you want to. Like, I won't advise it, but like, fade. Don't be afraid to fade me. Like, if you see it clear as daylight, that's whose money you're taking my money in a lifetime. So don't be afraid of it. That's the point of life, to press into it. Because I know when I'm wrong. I know when I could have cut it, when I shouldn't have. But when you have other people listening and watching, you just want to get it wrong wholeheartedly. I don't really want to change anything. I already know where I could have, where I should have, where I would have changed. So. And it's also beautiful to watch me get it wrong, because that's what I really wanted to see. Like, when I was executing and all that, I always thought when I get it wrong, like, there's no way for me to get back into it. You know what I'm saying? But in reality, no, that's not the truth. That is not the truth. So I conditioned myself to watch a few of the best traders that I saw, just watching them lose. And then not even if they don't treat it like it's nothing, they just lose. So they're just watching them lose is amazing. It really is. It really is. Because it gives you not peace, but it just shows you, like, you're not like, they're not gods. They're not the best things since sliced bread. They're just same as you. But every time when they lose, they just walk away. You don't. You stay here on the screen and you just let it consume you. That's what I learned. And walking away is the best thing since last bread. I hope you guys can hear me perfect, because now we're having 17 million people in here. Shout out to all the 17 people that showed up to my live stream. Like, the numbers are growing, bro. We started at like 4. Now we're at 17, bro. I need to marry one of y'all, bro. Just hit me up, famo. Like, we lock in and we in for life. We're literally in for life. Let me just confirm what time it closes today. Because then I'll have to love and leave you. I'll take a 20 handle short if it gives me. If it don't, then it's cool. Though I'm not interested in showing off. I am actually, but I'm not really interested in catching the bulk of the move. I don't have time. And also, let's say if you're only studying it from the current 1 hour chart that you're looking at, if you were to remove everything just to study, and you had to mark just this hour all the way to that hour, just what currently has dealt that the market dealt with. This is the first measure of retracement. From there all the way to that, we're still in the top half. So you don't want to see, if you see it go anywhere near here, that's signs of lower prices. So if you're in long or you're looking, expecting higher prices because of that fair value or whatever, you should see that now. Literally, we're entering the time. So be patient. And also, when you see this, what do you see, man? All you see is sell side, sell side, sell side, sell side, sell side. That's engineered liquidity, and it's doing it beautifully. So be patient. If it takes buy side, that's cool. You already know what you're watching. Anything else, if it exaggerates and goes above this, then it's okay. What's the next one? That on there, which is the first inefficiency post. What? 9 o'clock. Isn't that beautiful? 9 o'clock. I told you study all the first inefficiency post. 9. This is the first. This is the one here, right here. First inefficiency post, 9 o'clock. Then we go lower. Then we have this second one right there. We have the third one. We have that small one there. We have this large, which I would be watching honestly. The rest of small ones I don't care about, but it's just not on my radar if the market is gonna spool somewhere, you know. So yeah, that's kind of what the brain is seeing. So don't be afraid, bro. Like, chill. Literally just watch everything from an hour's perspective. Don't do too much. Don't force yourself to be in sync now. Like, watch how we're gonna take these lows, and watch what time the hour forms, the high, swing high. And if you couldn't predict it, that's okay, because these are not how high forms. You know how high is top, honestly. It's just a sharp one, bam, then it trades into it, and then bam, and then really runs, low resistance liquidity run. So when you don't see that, what does that show you? First telltale sign that you've officially entered a consolidation. What comes after consolidation? It's an expansion. So it's going to either expand straight to your stop loss, or it's going to displace in your favor. Those are the only two things that will happen. Those are the only two things that can happen. So my heart has already accepted those two. And whether I get it right or get it wrong, it doesn't matter. But those are the two outcomes. And my ability to accept those two outcomes, that's my strength. That's where I find conviction. Not in, I got the high, I got the low. It's easy, bro. Can do that in our sleep, bro. Can do that with our eyes closed. But thank you guys so much for showing up, man. You guys are lovely. Still think we should have been watching the mentor instead, bro. I would love to watch him relative to me, see what he was talking about, what he was on. But the only thing I don't like, not that I don't like, but just most of my mentors' lives, when it comes to reviews and commentary, it's price action that has passed. So that's cool. I have nothing left to learn from the past, but I love listening to him when price is moving and is marking specific levels and saying specific things, because you get to see him as an executor, and it's beautiful to listen to another trader's thoughts as he watches tick for tick trades, or as the minutes tick by, literally. Thank you guys so much, man. We got likes and everything. You guys are liking and subscribing and all that, bro. There's no need though. Just no need to like, no need to subscribe, bro. Just do you. Your time is a valuable asset. It's the most valuable asset in the world. So now what are you going to do? You're going to wait for the first inefficiency post 3 a.m. And what would you prefer it be said? Look at where we are currently. In my opinion, is how I look at it. We've just taken this high, that right high there. But we've displaced lower, but we're still in a consolidation heading into 3 o'clock. And heading into 3 o'clock, what do we have? We have that liquidity right there that's nested at maybe the third inefficiency post 9:30 or whatever you want to call it, don't matter. But it's resting right by that inefficiency. So the fact that we have that and we have a time in which we expect spooling, we could see it manipulate, take out this high, and then roll lower, heading into the later on in the session. And that's a thought. But preferably, if this was somewhere around here, I would prefer it to be a bearish one. You want to see it go into it and roll lower. So we're going to study the first inefficiency post today. At least I can do that, man. Not the one first 2 a.m. and all that. But everyone you study the same. No one cares, bro. What's closing? See, they don't want me to show the source, bro. I'm closing in the next 30. Lord have mercy on me. Lord have mercy on my soul. Man, I think if I was in trading though, I was gonna be a rapper or a singer, bro. Like I was gonna be with Rihanna, maybe Beyonce or something. I don't know. But I genuinely think like I was gonna be in the music industry because God knows how much I love music. God knows how much I love music. I think it's best, like music is the best thing to ever happen to humans. People don't listen to music much. So, and I think I would have been not able to express myself better, but I would have loved to learn how to express myself through music. It's very nice to think about and watch. So I want you to notice something as we continue to go higher. What are we doing? We move all these. What's this? See that? What's this? See that? It's engineering liquidity. So you're on the right side looking for shorts, but you might be just too early. And that's okay. That's okay. You get that? That's tracking and studying the financial market, like just tick for tick. And being patient. Knowing your setup is there, meaning whose money you're taking, the target, and how it's engineering the sell side liquidity, is just a matter of time. You need to either wait for the first inefficiency post this or the first inefficiency post that. That's okay. And look at the first inefficiency post, 2 o'clock, opens, trades into its pulls higher. What do you expect if the first inefficiency post 3 a.m. is bullish? I don't understand, bro. Sometimes I don't understand. It's like so easy, but we just focus on everything else, but the breakers or whatever. Notice how I'm not focusing on those, inversion. I don't even know what those things are called. It's just time and price. First inefficiency, going long or short. Yeah, obviously those are getting manhandled, those relative equal highs on, like that's free money, bro. Might not be today, but that's free money, literally, bro. So, but these lows, man, they're gonna be just free money, bro. I swear. Okay, so what I'll do is it's a bit too small, the first inefficiency post 3 a.m. But I'll study that. If I was looking for longs, that would be the first area. But I'm still not sure. I will only get efficient movement to take out that high. But my brain will just mark it. I won't change my thesis, but it's beautiful to study it. Just like how you would study the first inefficiency post that. Just sit there, trade into it, stop loss just below that swing low, targeting that high. That's a model. I swear to God, that pays your rent. I swear to God on Jesus Christ, it does. How many handles from here to there? It's 13. One mini, how much is 13 handles? 2 minis, 3 minis, 4, 5. You get what I'm saying? Numbers get more interesting that way. But now you don't think about it from, I wait for time. The first one, what have we done? We've buy side, we've traded, whatever, don't matter. But you just, even relative to the previous hour, the first one was bullish, and then you traded. Come on, y'all are playing, bro. Y'all are playing. So now this is how you know it's going to play inversion. Inversion. So just wait. If you don't want to participate in the longs, cool. Wait. Just wait. And there's a reason I don't want to participate in the longs. Hopefully you'll see as time passes, but I will be dipping it like maybe 15 minutes past. I think the longs were enough. The shorts are a bit, we're just in a consolidation, so you should expect an expansion in one direction. If it takes out that high, I'm gonna most probably call it a dirty year, and it's cool. But you study that. But that's a model in and of itself. You don't need to make money from it, but that's it. You just wait for that. If it takes out that low for the hour, or efficiently removes it, it's okay. Don't trade, leave it. You're done for the day. But now, let's say you're on the opposite side and you're studying the first inefficiency post 3 a.m. What would you want to see? You want to see it melt through it. You get? It's the same thing, but you're just studying one focal point. Nothing more, nothing less. And I'll reverse and take those long. Bye-bye. Basically, market so fast doesn't even offer you longs. Beautiful. Would have been efficiently removed from that. But it's okay. So now we've taken our buy side liquidity, or we are about to take our buy side. What's the nearest form? It's that one there. So you just continue to watch, and I won't be here to catch the shorts with you, but you will see in my most probably on my Twitter, I will post an execution short, because just to flex, because we can do it. It's the only reason. That's literally the only reason. Flexing. But shorted a bit of macro, but still left the smooth lows since we. Oh yeah, that's cool. Going short. Wait, what the hell do you mean you went short at that time? Oh, you're still holding it from there, or from here, the macro. No, don't do that, because this is the lunchtime high, so they tag them, bro. Like, there's free money and free money there. And also, if you look at it relative to the range that it dropped, like from here all the way to there. You get what I'm saying? 50%. You see that? Come on, like, why wouldn't they do that? So you need to be cognizant of these things and what day of the week it is and all that. But if you don't just have these small things where you're watching it, it's gonna be. Did we just efficiently remove me so I can roll on? Okay, cool, bro. Cool, NQ. I'm not interested. So now let's say practical example. Like if we didn't take out that high, I won't lie to you. It would have been a different story. But this for itself is a model where you study for time, you wait 3 a.m. The first inefficiency. We have a high, we have a high. I would have preferred it to be lower, honestly. Then we've traded into it. That's a model. You just stop right there. And targeting that. The only reason I don't like it is because we already bumped the high. If you look at it relative to this, that's the only reason. If it was a bit lower, then yeah, that's engineered liquidity. But the fact that we tagged it and you know what our bias is, we're looking for shorts, you're cautious. So now I watch that in the same inefficiency. I want to see if it's going to offer inversion, because that's what we wanted to do. But you watch relative to time where we are, literally. So nothing should, if you're looking for longs, nothing should break this candlestick. It's kind of your order block, if you want to call it that. And then everything is just within this range. You can drop to a 5-second chart, you can drop to a 15-second chart, a 3-second chart, 1-second chart, and everything should not take out that low. If it does, you're wrong. That's it. I don't know if I'm a bit too zoomed in to the charts. And also, I don't want to take a long, I don't want to, it's cool to see my execution, but I'm just tape reading. So right there, then you want this to be the low of hour. The next minute should open and not take out this low. And you should see gravitate for these relative equal highs right there. 3 seconds left. So now this is a low. My stop would move from wherever it is, wherever we entered, and it will go just below that low. Yeah, I'm from SA, my good sir. Shout out to all my people in South Africa. So when I say I'm moving my stop, it's not that I want my trade to breathe. It's just I'm just being, because I know. But it's cool, you can keep it there, it doesn't matter. I won't lie to you, what's happening in my head right now, I'm thinking, it's crazy how just one tick can make someone so anxious. Like it can not disturb my flow, but literally can either predetermine whether I take the trade or not. It's pretty beautiful. Because if this was just a tick below, I would have been, I'll say, more confident, if you want to say that. The fact that it's not that it makes me not have less conviction, but it just tells me that we're going to be in a consolidation longer. And if we displace lower, then it's cool. Like I'll still take that short because you know what we're targeting. It's these babies. But when you're live and you're reading every candle by candle by candle, it's beautiful. It's intoxicating. And I hope I'm not too close and not too zooming in. No. Trust me, bro. We're taking these lows today, bro. We take these lows. We taking them today, nigga. I can bet my house on it. If you don't think it's okay, put your stop loss there. Put your stop loss there, bro. That's it. If you think it already did everything, just put your stop loss there, bro. Just go long now and put your stop loss there. And you can come talk to me after a few minutes. So I would have never pyramided there, ever. Meaning I wouldn't go long again. I wouldn't. So now here, even though you were looking for the first inefficiency to play inversion, where are we? So even if it continues to go higher, be patient. It's going to play inversion. That's its function. But for now, it plays what it has to do. It's free money for now. So you see how awfully similar it is. Trade into it. Should see spooling high here. We trade into it, just break. If we don't see any, so it's okay. You're wrong. Like this, I don't know. The market don't pay me enough to explain why it don't happen. So that's basically it. 206. 206 is crazy. Martin, yeah, I think we should watch that one. I kept telling them though they shouldn't be watching mine, they should be watching. But like I think if you're profitable, like you don't really spend your time on Twitter or on YouTube watching other people make money. I don't think that's viable, bro. So I haven't watched my city in a while. I would love to, man. I miss him so much, but like I gotta be making money. I can't be learning. Um, I'm way past being a learner. So, but I'm grateful for everything. He was an amazing teacher. But there are times where you just have to get out of your own comfort zone and press into yourself a little bit. It's not about anyone else except your ability to press into yourself. So honestly, I will. We are 15. You see now, bro. All this time I've always muted, bro. How long have I been muted, guys? This is bull crap. All this time I'm talking to myself. Yeah, now I'm not watching ICT. I wish I was, bro. No, I don't have time to do that. That's bullcrap, bro. But yeah. Well, anyways, yeah, I've literally been muted the whole time. I don't even know what to say. Laugh at me while it's still early. But I want you first. But I was just explaining something. I want you to see something. We have relative equal highs and relative equal lows. But that high took that out by 1 point. Yeah, I don't like that. Don't like that, bro. I don't like that. So, but every first inefficiency, we're looking for it to play inversion on the sole basis of we're looking for shorts relative to the equal lows that formed on a higher time frame. So this is a short scalp. You're looking for it to trade. We got in at 309, targeting those highs, but it's low probability because that high took out that buy side. So, but we're in a consolidation. What are you waiting for? Expansion. What time are we in? The last hour of trading. So it's like we're expanding, but overall we're looking for lower prices. But in the current price action we're in, we're expanding for liquidity, the nearest form of, we're trying to offset, like almost do this, what we're trying to do. We're trying to trick them into thinking, hey, we're going long. So what's the best thing to do is to sweep buy side first and then roll lower. That's what I see. If we roll lower now, then that's even better. That shows signs of what? Weakness. It's like it can't even do that. It's like, man, I can't even manipulate. But anyways, let me guys love and leave you because it is 10 minutes to the closing time, Jim. And as much as I would love to sit with you, I've been quiet for the past freaking 10, 30 minutes, which is like ridiculous, bro. Which defeats the purpose of me live streaming because how am I live streaming if I'm quiet? But yeah. Man, I was off for like 5 to 10 minutes. It's crazy. Like I bet my house on longs. You know what I mean? Like we're on Front Street here, bro. We're not vague, man. You know what I'm looking for. Like you know what I'm looking for, bro. Wait for this price action. That so the target is that just these relative equal highs, but overall, we're looking for the bears. We're with the bears today. Let me do this just to show that I'm with the bears. Like the bears are heavy, like red, bro. All I see is blood. All I see is blood. All these lows, it's blood, bro. It's blood. But for now, you just want a turtle soup and then roll lower. That's what you're looking for. Fair enough. If I do think the lows, not when you say this session, are we talking about close of day, like the low of day is already in? Personally, I would like to differ. I don't think low of day is already in if we're counting from midnight to midnight, but it could be. Then they will use tomorrow, Thursday, to continue the run lower. I don't see why not. But if they were looking to run price higher, like we wouldn't be in a fucking how many minute consolidation. It's almost like a few minutes. How many minutes? I have to leave now. Gym is closed. But look at here. We within 1 hour we only in a 30 handle consolidation. So like it's not really that deep. But the fact that we're consolidating here, that shows weakness, not strength. Or PML. Okay, now I do think Asia might do it. I don't know, man, but I do see. I'm with the Bears today. I really am with the Bears. I'm not with the Bulls. I won't lie. But anyways, let me love and leave you guys. Thank you so much for blessing.